Hey everyone, welcome back to the channel where we break down stocks in a way that actually makes sense for real investors. Today we're diving deep into Canopy Growth, ticker CGC, a name that's been swinging around the cannabis space for years and still carries plenty of drama for anyone watching the charts. Let's kick things off with the bigger picture. Canopy Growth has been trying to stabilize after years of heavy losses and restructuring, and the market has been giving it mixed signals lately. The stock sits near $1, with a market cap around $420 million, which tells you right away this is a high-risk turnaround story rather than a steady compounder. The company focuses on cultivating, marketing, and selling cannabis and hemp products across recreational, medical, and cannabinoid markets. Most of its revenue still comes from Canada, but it's pushing into Germany and the US as well. With just over 1,000 full-time employees and headquarters in Smiths Falls, Canada, Canopy has been trimming operations aggressively to get closer to profitability. On the revenue side, the latest fiscal year showed about $285 million in total sales. Canada contributed the lion's share at roughly $186 million, Germany added $62 million, the US chipped in $28 million, and smaller markets made up the rest. That's a slight uptick from the prior year, but growth remains modest while the company fights margin pressure and heavy competition. Earnings tell a tougher story. Canopy posted a net loss of about $263 million for the year, or 88 cents per share, missing even the lowered expectations. Gross profit came in at $70 million, but operating losses and interest expenses continue to weigh things down. The company has narrowed some losses compared to prior years, yet consistent profitability still feels distant. Management commentary from the recent earnings call highlighted a focus on cost efficiencies, operational improvements, and selective international expansion. They noted progress in core Canadian markets and some early wins in Germany, while stressing that rescheduling talks in the US could eventually open doors. At the same time, they acknowledged ongoing margin challenges and the need to keep tightening the belt. Looking at the balance sheet, cash and equivalents jumped to $365 million after a big financing round, which helped push total assets above $1.1 billion. Current assets sit comfortably above current liabilities at a 3.3 times ratio, giving some breathing room. Still, negative free cash flow of roughly $69 million shows the business is still burning cash, and long-term debt remains a factor even after deleveraging efforts. When we plug the numbers into our rough model, fair value lands somewhere in the low dollars range at best. The stock has traded both above and below that neighborhood, depending on sentiment around cannabis policy. But the wide swings remind us how sensitive these estimates are to growth assumptions and dilution risk. Strengths include an established brand in Canada and improving cost controls. Weaknesses center on persistent losses and thin margins. Opportunities lie in potential U.S. rescheduling and European expansion. Threats come from fierce competition, regulatory uncertainty, and the constant risk of share dilution. Performance-wise, the stock has been brutal for long-term holders, down nearly 100% over 5 years. More recently, it posted a modest 5.6% gain in the past week, but still sits down 18.5% over 12 months. The chart shows classic volatility tied to sector news rather than steady fundamental improvement. All in all, Canopy Growth remains a speculative bet on cannabis sector recovery and successful restructuring. If you're comfortable with high volatility and binary policy outcomes, there could be upside from here, but the track record of losses and cash burn keeps the risk profile elevated. Thanks for watching. Hit that like button if this breakdown helped, and I'll see you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.